we have coined a word which is called return on pitch, ROKP. So we don't look at return on asset, return on equity only. We also look at return because India is filled with pitch. We do invest a lot in growth of the people because if the people grow, the organization grows. We have taken 15-20 years to figure out India. And this figuring out India is for us also. Even Indians have to figure out India. There is no wealth manager who even teaches you this. How to ladder, how to build a ladder. Because everything is either equity or bank mein rakho. If you look at globally, mutual fund is like BlackRock. And alternative is like Blackstone.
Hey there and welcome to Paisa. I'm Anupam Gupta. Want to get smart with your money? We bring in top experts to show you where to invest, what financial trends to follow and how to build lasting wealth. Ready to get smarter with your money? Hit that subscribe button for Paisa and check out our episodes. Folks, welcome to Paisa. I'm your host Anupam Gupta and on today's episode I'm really honored to feature one of India's veteran financial services sectors entrepreneurs, Rashesh Shah, chairman of Edelweiss Financial Services. Rashesh bhai, welcome to Paisa. Thank you so much for doing this for our audience.
Thank you, Anupam. I've heard a lot about your podcast.
Thank you so
I've
much,
always
sir.
been very excited, and I'm very honored to be here. So,
Thank you,
so
sir.
Thank you for inviting me.
I am absolutely fascinated with probably every phase of your story, and you've been through so much. I want to start at the absolute beginning. What I read, you came from a business background, and yet you went to IIM, insisted on getting into what we used to call service at that point of time, landed up at ICICI, set up Edelweiss in 1995 as a merchant banker. You just walk us through this early phase, like what were you thinking? Family mein kuch resistance hua, aapko ki nahi hua? What was that like?
No, actually, I was always, expected I will join my father and my uncles in the business and all. We had a small, what we call SME nowadays kind of business.
Yeah.
But partly, my uncles were there, my cousins were there, my dad was there. I don't think the business could accommodate so much people. So half the time we were all underemployed in that sense. So I used to go in my holidays, college holidays and work there. But I realized there was not much work and not much growth that was there. And then I decided that, maybe it's good to create optionality. So I decided to study, went to Ahmedabad.
Of all the things I am, why not like a CA or something? Management in the 80s was...
Yeah. But actually I am Ahmedabad. I mean, everybody knew, things like Bajaj and all that. But I think, so appeared for the exam and it was all fluke. I somehow, got into this, enjoyed that. I also met Vidya, after that we got engaged and married. She was also a classmate. So it was good fun. But after Ahmedabad, I was very clear that I wanted to do a job.
Okay.
I wanted to be a professional, as we used to call it.
Okay.
I didn't want to be an entrepreneur. So I joined ICICI, which was a nice professional environment.
Again, of all the places, no Citibank, no HUL, no ICICI in the 80s was just being set up. This was a DFI, I think, before it became a bank.
But ICICI was a highly coveted job.
Oh.
Because ICICI, as an officer, you get the best exposure. Industry, you'd look at project appraiser, you are dealing with industrialists. And it was true. The first 3 years in ICICI, you deal with entrepreneurs, projects, you travel all over India. You actually, it's a best place to learn how Indian economy operates, how Indian business operate, how projects get done. And obviously scars on the back, some projects don't work out well and all. So ICICI was a good experience. And then I was in the export group in ICICI, so we had a lot of good clients and that time export was starting to grow. So one of the client was Infosys. Which was early days, which was,
pre-IPO?
Much pre-IPO.
Wow.
And Infosys was a very small 100 people kind of a company. But Mr. Narayana Murthy was always very visionary and he was, so this is just post after the economic crisis in India, the entire balance of payment crisis.
Yes.
And Indian economic reforms had started, Indian economy had started opening up. So he used to say around 92, 93, कि new India is getting created. Entrepreneurs के लिए बहुत space है.
Wow.
You guys should be, and he was also contemplating the Infosys IPO. So, and we were also by then, after working for 3 years in ICICI, we were almost like stock market experts in our own mind. So he would ask us, what is a PE ratio, what is bonus. So we were always giving fundas And in that he said, you can help companies like Infosys, so you should be an entrepreneur.
Arey wah.
And initially, so I obviously argued, but eventually Edelweiss got created out of that, where we thought India now opening up capital markets could be a great opportunity. And having seen Wall Street and had some friends who were working in places like Goldman Sachs and Morgan Stanley in US, we thought India will create its own Goldman Sachs and Morgan Stanleys and all as we go ahead.
Obviously. And that happened actually.
And it happened. I mean, it didn't happen exactly as you thought,
Timing, yeah.
but it happened with, starts and stops and all. But yeah, I think that was a start. And it was very fortunate because NSE had just come in, SEBI had just come in. I think the automation of exchanges was just starting. FIs had just come in, and FI brokers were coming and were bringing in research practices. So it was, I think, the birth of capital markets in India, and we were just by fluke or whatever, just happened to be born around at the same time, and we enjoyed the upside of the capital markets over the years.
Exhilarating, huh? And
Absolutely.
what was you had partners, co-founders, you had a team with you at that point?
Yeah.
Or this was all your own?
So there were two of us, I and one of my colleagues from ICICI, Venkat Ramaswamy, he is also still with Edelweiss. So we both started, and then over the years, we then hired people, and that is another thing we've been very fortunate. So we were very fortunate in getting capital market, evolution in India starting. But we also have been very fortunate over the years that we have always got good people who have worked with the same level of commitment.
I'm going to come to that as a separate question because
so that has helped propel our growth.
Yeah. Okay. 1995, Edelweiss starts as a merchant banker. I'm sure you would have had a few IPOs here and there. You would have done some work at that point of time. And then you land up in the Asian financial crisis. उसके बाद एक दो tech boom आ गया. चलो ठीक है, उसमें जो निकला वो निकला. Then you landed up in the tech bubble. What is it navigating?
So actually, first we didn't do IPOs because we are not qualified for that. So there is another story of Edelweiss is we needed at that time to be 1 crore equity to qualify for a Cat 1, merchant bank license.
Yeah.
We didn't have more than 40-50 lakhs of our own money.
Wow.
So we jahin se jod board ke borrowing from friends. We actually borrowed against our home, basically a home loan that we took and put money, and somehow we got to 1 crore. So we start with 1 crore rupees of capital. We are starting to put in our application for the Cat 1 with SEBI. And then SEBI changes the rules to 5 crores capital required from 1 crore.
Wow.
Overnight.
Okay.
So our entire business plan of being a merchant bank, it just fell apart because you are not even Cat 1.
How do you go from 1 crore to 5 crores in the late 80s?
Yeah. So, and when even 1 crore was a big stretch for us. So then we decided to focus on the activities which were not requiring Cat 1, which was mainly M&A and private equity. And we started private. In fact, that was the birth of private equity also in India.
Wow. Okay.
Some of the early private equity deals, some of the early venture capital deals, we were then advisors, and almost I think 1 out of 3 deals in that phase between 95 to 2000. We were involved in some way or the other.
1 out of 3
of those, early stage private.
So all the experience you had gained in ICICI, talking, dealing with companies, understanding the annual reports, doing all that work, even if it was with Mr. Murthy, that basically helped you in that.
It helped me, but all this was startups, and startups were very, very different from doing project funding at ICICI, where you were looking at a steel project or a cement project. This was startups like Rediff and Daksh and all of that.
Wow.
But you understood the entrepreneurs, the people, understood the vision, how to convert into a financial plan, into a business model, all of that. So we worked with quite a few of them. It was also very exhilarating. Asian financial crisis happened. Indian interest rates were actually very high. And then we had the internet crash, .com bubble. And almost 80% of our clients at that time were internet companies, e-commerce companies and all. So in 2001, we were suddenly had no activity, no business, but we had to reinvent ourselves. So we then moved from being an investment bank for early stage companies to be a broad-based capital market player. By then we had accumulated some capital, so we were now eligible for a 5 crore application. So we then became a Cat 1 merchant banker. We acquired a broking business also, and we started doing institutional broking, which was also very difficult. We started our institutional broking, and about a couple of months after that, Ketan Parekh crisis happened, and so suddenly everything went kaputs. But it was a good thing in hindsight because it allowed us to focus on building research, building, and we were a nobody in institutional broking. There were people like, all
Morgans
the
and
international
Merrills
players,
and
international players like Morgan, Merrill, and CLSA, Indian players like Kotak and Motilal and JM and all that. So we were nobodies, but we then decided to focus on two things. We focus on futures and equity derivatives. FNO had just started at that time. So we said nobody's doing FNO. It was a very small market, no trading was happening. But we became sell-side expert where we would go to mutual funds, explain to them how to do covered call and portfolio insurance and all of that. And the other thing we focus was on small and mid cap. And if you remember 2003, market was down, companies were trading. So there were companies which had a market cap of 250, 300 crores and we would do research on them. And there was no brokerage business, but we got the mind share. So what we focused on in institutional equities is to get the mind share on these two things, small and mid cap and FNO. Then when the boom of 2004 started, FNO market grew, small and mid caps grew, we started becoming a fairly prominent institutional broker. So suddenly out of not being anywhere, we were amongst the top 4-5 Indian institutional brokers. So then we expanded investment banking, broking. So I think our idea always has been look at adjacent markets and try and grow in them so that you can take the risk from the up cycles and the down cycles.
So I'm just I like to look upon this and help me here. Maybe this was 2000 to 2008 when the 2003 to 2008 and then 2008 to 2017 just before the IL&FS happened. You became a conglomerate. Asset base of like my numbers here say like 1,50,000 crores. I don't know whether the number is right or wrong. And you had a massive employee strength also. So if you could just talk about that phase.
So our actually balance sheet size at the peak was about 55,000 crore. A lot of this were third party assets. So we also had client assets, AUM and all that. But we did grow our balance sheet from about 1,000 crore in 2008 when we IPO'd to about 55,000 crore by 2018.
10 years, 55 times.
Because then we got into NBFC. We built an NBFC business. We built a housing finance business. And there obviously we had made some assumptions about liquidity and ultimately a lot of the focus was collateral based lending. We started off with loan against shares and then we expanded it to real estate, which was in hindsight not a great move. Because I think liquid collateral is not the same as illiquid collateral. The promoters are different. The promoters who borrow from NBFCs against shares are very different than the promoters in real estate. And the asset class is very liquid. There are a lot of other complications, legal complications, the enforcing. So after IL&FS, where the market stalled, we all had issues and we also got some scars on the back. I learned a lot on that. And our whole idea was to, as you said, build a conglomerate so that we can very flexibly use our capital, people, adjacent markets and try and give more and more products to our customers.
So you were present across segments, NBFC,
so
capital markets on the broking side as well as on the fundraising side. You were across all these segments.
So in capital market, we had broking, investment banking, wealth management, all of that, and then asset management. In NBFC, we had NBFC and housing finance, and then we had two insurance businesses also. As if that.
So the only thing left was what? Retail finance. You didn't go there.
No, we had retail in NBFC also, and housing was also retail. The only thing we didn't have was a bank, but we had almost all the components of everything else in financial services. And we became very broad and we had a lot of, and again I go back to people. We had some very good people who were high growth, who could do a lot of, so as we had more people, we also could expand in adjacent markets because we had leaders. And I think even today when I look back, some of the best leaders
I want to talk about that, right? Because I want our audience to know the ones that I recall, because I either know them in some way or the other or I've seen them. Naresh Kothari, Vikas Khemani, Nichal Maheshwari. These are the three guys I think.
So there, Nitin Jain is there. Ashish Kachulia was also in Edelweiss. So we have actually had some very, very, very good people who have gone and done a great stuff also. But even when they were in the company, they did great stuff.
So I want to understand here the conventional wisdom that says that an entrepreneur must be a micromanager. right? You hear a lot of founders saying ki from sweeper to managing director, I'm everything. Whereas, what I'm getting from you is there are two things here. One is that you're able to attract some very high quality talent, okay, which then went on within your businesses to build their own businesses. So the one thing I want to know is, where do you draw the line of letting other people come in? First question. And second question is, how do you choose? How do you find such people?
So actually, people is always, I think, an ongoing kind of an effort. But I think India, fortunately, we have some very good people. I think India, there is a plethora of good people. What we found in Edelweiss is we said there are only 3 or 4 things we'll offer. And we'll consistently, over 30 years, have offered those 3-4 things also. We'll offer you a good, clean, apolitical environment. And I find that itself is not as automatic, because there are a lot of organizations where you get, in the crossfire of politics. So one is very clean political, apolitical environment. B is a lot of growth. C is a lot of empowerment. No actually micromanaging. I mean, there is a lot of clarity in terms of what are KPIs, what you will deliver, what the strategy. We argue a lot, but once having agreed, you can drive your car. There is nobody telling you either le lo. And the fourth is help you in long-term creation of wealth. So we had ESOP. We had one of the earliest ESOP program in financial services in India, and happy to say a lot of people have made quite a bit of money out of ESOP. So we said, if you offer these 4 things, and then you can attract a lot of very bright, high energy, high intellect people. And then you bring a lot of clarity. So in terms of what you expect from them, how they do that. And actually people have positively surprised me. I mean, over the years, I think people have grown, they have done amazing amount of stuff. So I always want to give the benefit of doubt, saying people are actually capable of a lot more than we think they are. So I think if you can come from that hypothesis, you can get a very good people. So we have internally a lot of, so it's not abdication, but it's actually empowerment. So, but there's a lot of MIS, there's a lot of data, there's a lot of clarity in what you will deliver. So it's not that tum jaake karo jo bhi karna hai and come and inform me at the end of the quarter. We are involved a lot. We do a lot of problem solving. We also have an approach saying, if you struggle with something, we'll help. We invest a lot in coaching our leaders. So, the conventional approach is that leaders grow on the job by trial. Somebody is bright and he or she will do some great stuff. But we do think that leaders can also be coached. Like a great athlete can be coached. A Sachin Tendulkar also needs a coach. A good leader who has all the qualities also can do with coaching. So we do a lot of coaching. Wow. I have gone through 3 coaches in my life also.
Yourself? This is not you're not talking the marathon, right?
No. I think these are executive coach in the business.
Wow, 3 yourself?
Yeah. My third one, she was teaching me how to listen.
Amazing. But do you think that Indian CEOs and business leaders and family business leaders, by the way, are even open to this idea of executive coaches? Because here, all I see is that my way or the highway. Like, I am the boss. I know what to do, said. But to have a coach shows of an incredible, willingness to learn and say that I want to be more productive.
Yeah, and I think there is a lot to learn. And a coach is an extra help that you get, because we all have blind spots. We also as you grow, what worked for you up till now may not work, because your needs, your own requirements change, the way you deal with people. So when Edelweiss is a small company and we were all in, sitting in one room, you could stand up and scream at somebody and work will get done. As you get older, you realize that screaming doesn't work now. It's a very different. So I think coaching is a good thing. So we do, it's only one example, but we do invest a lot in growth of the people, because if the people grow, the organization grows. But because we had a lot of good capable leaders, we created a structure. Now, unfortunately, that structure in hindsight was too complicated and complex as a conglomerate. So the last 8 years, we have redone the structure. So it was one conglomerate with a lot of common resources and all that, like the holding company that I am the MD and chair of, had 3,500 people at that time.
3,500? Wow.
Now we have only 48 people at the holdco. So we have made the center very lean. There are no matrix reporting, there are no group HR and all. But we have divided Edelweiss into standalone businesses. And all businesses are empowered. They have their own board. We are on the board. but they have a board, they have their balance sheet, they have their 3 or 5 year plans ready, and he's a business as an MD, and that MD, he or she is responsible for delivering the results. So we have now converted ourselves into an investment company rather than a conglomerate.
I find that interesting because there is one. क्या था एक ज़माना हुआ करता था where conglos were the thing to be in.
Yeah.
Like you have the Birlas, you've got Tatas, it made sense at some point of time. Maybe we are now in a situation for the last, I don't know, at least 10-15 years where monoline is the best. करो तो एक ही करो, बस that's it, वही करो. You maybe it's asset light, maybe it's high margin. I don't know. You have any thoughts on this, that which is best or depends or what?
So they both have the pros and cons, but I think conglomerate adds complexity. It does add a lot of control. So if you want control, if your primary objective is control, then conglomerate is a good structure, because then everybody is a business division head. They are not independent CEOs. If your objective is creating value, then a unbundled structure is a better one. In unbundled structure, like we have it currently, there are pockets where there is excess capital and there are pockets where capital is required. So your resources become inflexible. In a conglomerate structure, your resources are flexible. You say, "Acha, ye business mein thoda problem hai," you go and fix that. So you have a lot of fungibility of resources. You have a lot of control in a conglomerate structure. Also, in a conglomerate structure, things are fairly hidden away. One business doing well, one is not doing well. It can shade each other. While in a unbundled structure, everybody is out there. But for an investor, it's much easier to analyze the business. It's also good for the management because it creates a lot of focus. Like when we were a conglomerate, it used to take us 6 months to even evaluate how the performance has been, because there was shadow credit and people were sharing the same resources. So who is using how much capital also you could not assess how much was the real capital being used by any business. Now all that is very simple. We have no MIS, everything is very black and white. So it just makes it much simpler, much more focused. And in a high growth environment, and you get the right leaders, that does unleash a lot more growth than in a conglomerate structure. They both have their pros and cons, but I think it's also very personality driven. If you like control, then conglomerate is the best. If you like empowerment and building leaders, what gives us a lot of joy is building businesses and building leaders.
I want to talk about this building leaders, but I can't get over this. I just can't get over this, right? And I'll tell you why, right? Because I worked for the longest time in an industry where my seniors across organizations, by the way, used to say ki bas salary and bonus, that's it. Uske aage, what is needed, na? I mean, see, if you're working for, say, a paints company, you're working for an FMCG company, you have all kinds of growth areas. Transfer kar diya, different country, different product, different this, different that.
Right.
Here, what are you doing? You're doing the same thing when you come in, same thing when you go. You do it for 5, 10, 15, 20 years. So the received wisdom from the seniors was that the salary and the bonus are reflective of your performance. Why do I need to care more about you? Here you're saying building leaders. Now, when I hear that in a financial services background, I can only think of large companies abroad, especially the West, like a Citibank, where you would hear of grooming leaderships and all that. For me in India, this concept is a little bit new. You spoke of Mr. Murthy, you know what his views are on work-life balance. We just spend some time here on the importance of building leaders. I'm sure it applies not just to financial companies, but for any entrepreneur in any business, Conglo ho ya monoline ho. Just spend some time talking about that.
So see, if you talk to any company anywhere in the world, one of the things they're always short of are leaders. Every company you will talk, they'll say, I wish I had more leaders. So I think leadership is a quality, because result goes beyond something like domain knowledge or managerial capacity, because leaders are ultimately, for some new opportunities, they are the vision, they are the ones who can articulate all of that. I mean, even in a cricket team, a good leader can the body language is very different of the team under a good leader. A Mahendra Singh Dhoni can easily, take a bunch of people who are not as confident and really make them. So I think leadership does really matter. So I think what you're saying is right, but it's now starting to change. I think one is the organization has to believe that leaders can make a difference. They are important, and what do they do? Very often they just walk and talk. They go and do handshakes, but even that act itself I think adds a lot of value. We have seen that in cricket, in football, in everything else, that in a team sport, I think leaders do matter. It can be a coach, it can be a captain, but you need leaders. I mean, if you look at the Second World War, you are getting hammered, bombs are falling every day, and some speeches given which says we'll fight them in the air, can energize you. So I think one is leadership has to be seen as important.
Okay.
A second is you have to believe that you can invest in them. Otherwise, we also believe that leaders happen. वो अपने आप को आ गया, somebody shows up, but they're also groomable, they're also investable, all of that. Thirdly, you have to feel that opportunities are many. See, when you feel मेरा एक ही business है, मेरे को सिर्फ I want to make this cup only, and that is my only business. And if I only want to do that, then I need only a leader. I don't need, and that is already me. But if I want to say cup ke saath, I can make a saucer, I can make some snacks, I can make some this, I can expand into a studio, I can do all that. When you come from saying opportunities are actually plentiful, then you will see that the more leaders I have, the more I can harness those opportunities. And the last is a very personal thing, that you have to believe that I'm not all that smart. There are other also smart people in this world who can do, and I am reminded that every day. In fact, one of my early coaches, it was also a she, large part of coaching was to say, keep your mouth shut in the meeting and you can speak in the end, but why speak at the start? So even that was coaching required, because we are all entrepreneurs, we all want to express opinion, we are very opinionated, we have analyzed an issue, so you come to a meeting and say, okay, ye problem hai, ye answer hai, chalo. But it takes a lot of patience to let everybody else speak, and I have to, and even now it is work, it is practice. So it is something you can invest in. So I think it's ultimately is how you see the world. But I think India today, there are plentiful of opportunities. And we have seen companies like Hindustan Unilever, they produce leaders, and there are a lot of other, ICICI has actually produced a lot of leaders. So I think organization can also build leaders, and organization growth can be codependent on that.
Personally, what are the three qualities you look for in a leader? Like, you would hire someone, you would know कि ये आगे जाके CEO बनेगा. But for the lack of a better phrase, to use a Bollywood line, लंबी रेस का घोड़ा है. Okay? Once a person becomes a leader, and you've seen many leaders, you've built some of them yourself, what do you think are the top three qualities that person needs to have to actually be there and stay there? I'm saying this from the perspective of, when someone hires for a job, we look at education qualification. And something, chalo, theek hai, CA, MBA, jo bhi hai. But 20-30 years down the line, that to goes into the background. So what are the top three qualities you think that?
So I think if I look back, I think the one is, I think all leaders have ability to manage their energy but energize others. So energy and energizing is one that always comes. I mean, you cannot be a leader and you will go through your ups and downs, you have good days, bad days, you have bad outcomes. But if you can manage your own energy, and ultimately what we call moods also energy only. So if you can manage energy, your energy, other people's energy, I think energy and energizing is an important part. I think the second one is a continuous approach of not I, but us.
Wow.
See, it can't be, it can't shift from I to you, because nobody is a saint. So it's not that you are doing other people's service. But I think their conversation also, they will not use I too often. They will use we. They will try to come up with win-win outcomes even when there is a conflict and all that.
Okay.
So I think that I versus we, and this is an experiential thing, but you can see that. And the third one is ability to be comfortable with what I call delayed gratification. Because leaders do, I think one of the job of leaders is to invest. And invest is what? It is delayed gratification, right? I mean, ultimately, as any economist will tell you, hard work is profit, comfortable life in the future. Laziness is comfortable life now.
If you're someone young looking for some advice on how to build your career, believe me, you cannot get better than this. We're going to take a small break. On the other side, when we come back, we're going to talk about a lot more. The story of the India growth story, credit, a lot of that and much more. So don't go anywhere. We will be right back.
Did you know Indians report nearly 800 cases of online financial fraud every day, which has resulted in losses exceeding 1,000 crores in the last 5 years? To keep you safe from such fraud, I am starting my newest podcast series, Conversation with Vigilante, an initiative by HDFC Bank. In every episode, I will feature special guests who can share expert insights on the different types of fraud, their modus operandi, and how you can protect your money. Stay safe, stay vigilant, and don't forget to tune into Conversation with Vigilante. Catch the episodes on all audio streaming platforms and V for Vigilante YouTube channel.
Rashesh bhai, just talk to us about the Edelweiss today and the Edelweiss of the future, right? What happened after 2018? What's been that journey from there till here? And now where do you see yourself going?
So if I see Edelweiss, I think there was phase one, which was until the IPO, where we were capital starved and people heavy. We had lot of smart people, but we had no capital. Then 2008 we IPO'd, and between 8 to 18, we had a lot of capital, both equity and debt, and we had a lot of smart people. So we were first only people dependent, then we became people and capital. But I think in that capital, we were not as efficient in capital allocation, capital investing, even analyzing the returns on capital, I must be honest. So I think post 18, now we have people still continues to be the main vector. But on capital side, we are now want capital efficient growth, not just growth with capital. Because you can put capital and grow easily, but to put capital efficiently and grow is now the new mantra which we have espoused from 2018 onwards.
Okay.
So a lot of capital efficient growth, people still being the main driver, and the other main driver in Edelweiss is constant innovation. And again, innovation is a big word, everybody uses it. But one of the things in financial services, ultimately, this is as commoditized a business as anything else. A mutual fund is a mutual fund. A small cap mutual fund, index mutual fund is a mutual fund. A home loan is a home loan. A car loan is a car loan. A car insurance is a car insurance. Ultimately, a credit card is a credit card. So financial services, and because it is highly regulated, there is very little, you can't suddenly come out with a credit card nobody else had thought of, because RBI will have rules and restrictions around that. So it's very hard to stand out, because you end up becoming a Me Too. Now, if you're a Me Too and if you're a large bank or a large corporate house, it's easy to stand out. But people like us have to work harder. And we focus a lot on product innovation. So in our mutual fund, we did Bharat Bond. In our alternative asset management business, we are focused on yield and income solutions. So we have constantly said where we can go, where there is a customer need, where competition and awareness is low, and we can build some angle, some capability, and we are constantly looking, and that is what I call innovation. Innovation is not going and doing something and suddenly it's understanding client need and creating something that is not easily catered by in the market. So we constantly look at that. So I think between these two, I think innovation on one side, and this is where we get our juices going. We really want to invest in that.
Folks, Bharat Bond, we've done an episode with Radhika there, like, what was it, 2018, I think? Like, it seems so long back now. Please do check out that episode. Rashesh bhai, asset reconstruction companies, ARCs, you've built probably one, if not then at least one of the largest businesses in India just on that. I want, if you could just explain to our audience, what is this about? I've never covered this topic at all in all my 8 years. Obviously, because, it's also something that's not retail focused. It's more of an institutional thing. But it's a fascinating area where in India, I'm sure you remember the time when there used to be just BIFR. A company ठप हो गया तो गया.
Yeah.
Lender हो तो भाई, you're gone. Equity है तो you're gone. From there to making asset reconstruction, insolvency, into something that's salvageable. And you've got some stunning numbers. Okay, just walk us through that entire story, how you build that business, what it's about.
So I think fortunately or unfortunately, when I was in ICICI also, I saw a lot of bad debt and NPA, because India, if you look at the history, I think any capital expenditure cycle, we are currently saying there is no private capex, and hence there are no NPAs, because any private capex will have NPAs as a follow through on that. We have had that in
2008.
From 88, 89 onwards.
Oh, yeah,
I mean, we have had that.
There was a banking crisis in the 90s also. NBFC crisis in the 90s
So
also.
in 2003, banks had 11% NPAs. In 2003 also.
Wow.
That is where RCL was born and all that, and that is where BBIFR and all got scaled up. And we had the rule on SARFAESI came about.
SARFAESI,
Assets. So I think every time, every 8-10 years we go through a cycle, there is a lot of bad debt build up. Now, according to us, there are two kinds of bad debts that get built up. I think one is where the assets are good, but the promoters are stressed. We call them, they are not stressed assets, they are stressed promoters.
Okay.
And we saw quite a few of them where they were nice assets, very good assets, but the promoters had to deleverage. They had to sell assets to pay off the loans and all that. The others are assets themselves are bad. So if assets themselves are bad, then there is not much you can do about it. But if assets are good, and if the promoters are stressed, then you can restructure, you can revive, you can find a new buyer, new owner, you can bring more efficiency. So we know these cycles happen in India. If you realize in the last NPA cycle in the banks, the total bad debt of banks was about 11 lakh crores.
That's correct, yeah.
Out of which about 5-6 lakh crore has been written off.
It was 2018 number, I think, if I remember correctly. Yeah.
Out of the balance 4-5 lakhs, they sold about 2 lakhs to ARCs, and the balance they resolved on their own. Out of the 2 lakhs, and all these are very broad approximate numbers, approximately 1 lakh was acquired by us.
Wow.
But again, we did it very proactively. We identified the assets and we said, ये paper company बहुत अच्छी है, ये steel company बहुत अच्छी है. Asset is good, but the promoters are stressed. And there are 18 banks who are there, which become NPA. Each bank is a small share. So we said a good asset, a stressed promoter, where we can aggregate debt with a multiple. We identified assets and we had some 85 such projects.
85?
That we identified. We ended up buying only 30 out of those because not everybody was a seller in, and not all banks sold, but whoever sold. So it can be a real estate project that is stuck, but a very good project, but it's stuck for the last mile funding. So we specialize in good assets, proactive planning on how those assets will be revived, going to banks. See, otherwise, the way this business is to work, when a bank wants to sell a bad asset, they come to the market. We said, let's turn this upside down. We go to the bank and say, ye are the 30 assets we are interested in. They are all in NPA list of yours. Anytime you want to sell these 30 assets, come to us. We already done our homework on them.
Wow.
And when you go to all the banks, because each asset has got 8-10 banks and all. So we did this proactive planning, having a plan ready off the shelf, because also when a bank wants to sell, it's usually around end of the quarter. So you have to turn around very fast saying, yeah, okay, out of this 3 assets, I'm buying this asset. And you should have the price ready. So the more homework you do on the asset, the better off you are. The more proactive you are, the better off you are. The more aggregation you can do. If there are 18 banks and you buy only one bank, it's not as helpful. But if you can buy 8 or 10 banks, then you can aggregate, you have some scale. The more you have ability to, work through the legal means and all. And we scaled up around the IBC came. So when IBC was getting ready, we started working on that. So when IBC came, we were ready with the assets and the plans and all that. And you need ability to be able to price it and all. So we did all of that. So we started our ARC business in 2009. Between 9 to 13, we just built the base, build our foundation, good people, training, all of that. We were very small. Around 14 onwards, where the NPA build-up happened, and IBC was around the corner. So between 14 to about 18, 19 was where we really acquired a lot of assets from banks, helps bank resolve that. We have actually recovered more than 58,000 crores.
Recovered more than 58,000
crores up till now. Because all these were fundamentally good assets. I think the idea is, again, this is a very niche business, can be very profitable and can really add value, because here you are not competing with a bank, you are partnering with a bank. You are taking the pain point of a bank away. Now we are doing that in retail assets, because last few years there is no capex, so there are no wholesale assets, no corporate loans.
But retail book is growing.
But retail book is growing. Now in retail also there is unsecured and secured. So we are building our expertise on that. But our idea is be ahead of the curve. First build your expertise, then build the business. It's like, in that movie 3 Idiots, where he said, Kabil bano, kamyabi to jak maar ke piche aayegi. So our all focus is identify an opportunity and first build capability in that. and then you can always build a business around that.
I'm just, one of the small takeaways, I hope it's not a worrying takeaway, is that if Rashesh bhai is building capabilities in the retail unsecured business, पता नहीं next 3-4 साल में वहाँ if there's some problem, and you never know यार.
नहीं, already हो रहा है, but अभी retail unsecured में हो रहा है, like MFI we saw recently and all. We are not that big in the unsecured side, but on the secured side, home loans and all, where there is a lot of restructuring of the loan possible. All of that, there is a market, but it's a much smaller market. It's not as crazy as what the
obviously.
wholesale market was. The wholesale 11 lakh crore at one point was almost 8-9% of the banking assets.
Wow, yeah, those were the heydays. I'm glad that we've kind of come out of that. Okay, moving on to slightly more, positive stuff. India growth story. I know that you're a big believer. What you said about Narayana Murthy in 1992, what he said at that point of time, India is going to change. Here we are in 2025 saying again India is going to change and everything is there. But honestly, what's your take?
No, actually, India is not going to change. That is a good news.
Okay.
India is not going to change. India has grown consistently over 35 years. See, I started my career in 1989. The Bombay Stock Exchange Index at that time was about 680, which is now almost 80,000.
Yeah.
So it has grown more than 120x in the 35 years, the 37 years I have. If you look at the compounding rate, it's about 14-15%.
Correct.
So if you look at last 35 years, India's GDP has grown between the extreme average has been between 5 to 7. Few times it's gone above 8 and few times it's gone below 5.
Correct.
But a large part of the data points are between 5 to 7.
Yep.
Okay. Our inflation has been between 4 to 8, largely. Our exchange rate average devaluation has been 3%.
3%, correct.
So 35 years where we have had, the global financial crisis, our India crisis, Indo-Pak stuff coming up from time to time.
Lockdown,
Harsha
pandemic,
Mehta, Ketan Parekh, Babri Masjid.
everything.
We have seen all of that in India.
Gold bhi pledge kar diya.
And the governments have changed. We had Congress government, BJP government. In all of this, over 36 years, I have seen this as one of the more stable long-term markets. I mean, this kind of stability, where inflation or a fiscal deficit has also been in the range. We have never gone to 10% fiscal deficit and we have never gone to 3% fiscal deficit. Our 10-year GSEC yield is also been between 5 to 7, largely. It's gone up and down, but so this is a very stable country. I think it will remain stable because India, one of our other assumption is India is what is called complex self-adaptive systems.
Nice. Complex self-adaptive system.
It's called CAS, which is complex adaptive system, like nature.
Okay.
It's complex adaptive system. It's very complex because one thing here affects a lot of other things, but it constantly adapts and finds. You can go through COVID and still adapt also. So the same way, India is a very complex adaptive system because we have bureaucracy, legal system. It looks chaotic. It looks unreal because there is no real method to the madness which is easily visible. But it's very adaptable. It's also very complex because it works state government, central government, all that. But over the last 35 years, we have seen changes, RBI, SEBI, all of that. However, India has steadily grown. We have never had a deep crisis like what happened to some Asian countries in the Asian financial crisis. We have never defaulted. So we have gone through the banking NPA crisis. So what I say is India is very stable on the long term. India is very unstable in the short term. So the good or bad about India is, and in Edelweiss we call it having a bifocal approach. So there is one India which we see on an everyday basis which is filled with drama, kitch. All the khatpat that you can imagine, which goes on, some income tax and CBI and ED and political upheaval, and the news media amplifies that manifold because everybody is India, Pakistan and global, and so everything globally India affects us, everything, and we love drama. Indians love drama. So our life is filled with short-term drama and a lot of long-term stability. And hence I call it bifocal approach. So day-to-day India, you go out on the road, there is construction going on, there is honking out there, they charge you. But in the middle of it, we are suddenly a $4 trillion country. Airports have grown, highways, coastal road has got created, sea-link has got created. So ye bhi hota hai, ye bhi hota hai. So you need that bifocal approach in India. And like IL&FS was a very existential crisis for a lot of people. It was really very harsh environment. Suddenly credit markets closed down. We have stuff like that. So our short-term volatility is very, very high, much higher than what it should be. Our long-term stability is much higher, and relatively it is one of the more stable countries in the world from an economy point of view. So how do you marry the two? And our approach is have a bifocal approach. Ek aankh, keep on this, because this is not imaginary. The short-term chaos is real. And this is also real. So if you do a 70-30, 70% optimism, 30% skepticism, it's a good mix to have. If you are, what I see, a lot of the foreigners come to India and they get very enamored by the opportunity in India, the growth in India. Then they come here with big plans and then they encounter the day-to-day life of India.
Reality check.
And you know, there is an internet meme saying India is not for
beginners.
India is not for beginners. Then the harshness of India hits them about, you know, some income tax refund doesn't come, or some income tax claim will
Or some
come,
law changes.
or some law will change, and all that stuff happens in India. Somebody will file an FIR against you. So when the reality of India hits you, suddenly the entire long-term story goes away. But if you get mired in this also, then you miss the long-term story. So if you look at everybody from a Blackstone to a Coke to a Pepsi who has done well in India, they've taken 15-20 years to figure out India. And this figuring out India is for us also. Even Indians have to figure out India. And it takes time. And I think all organizations also, that you know, ye drama bhi hai, ye upside bhi hai. And we have coined a word which is called return on khich-pich, ROKP. So we don't look at return on asset, return on equity only. We also look at return, because India is filled with khich-pich. You have all the khich-pich of everyday life that goes on, so excise inspector stuff and all that if you are in manufacturing. But there is a reward for that. So there is a return, there is khich-pich, and marrying the two is where you can, I think, create something.
Okay. Can we spend some time on credit, right? Because even before we were recording, you spoke about how you give this nice entire vision of yield and income, growth and income. And India's credit markets are underdeveloped.
If India has to go from 4 trillion to 10 trillion, our credit markets have to develop. The yield and income solutions have to come. Good things have happened. I think SEBI has done some great work in InvIT and REIT. They have come about. AIFs also, the credit AIFs are growing pretty well. I think the entire real asset market, there is an InvIT association, there is a REIT association. They are also doing a lot of education. So I think it's a next 8-10 year journey. But we have work to do, and we need a bond market. It was developing, then IL&FS happened, so suddenly we got 2 steps behind. But I think the need is there, the realization is there. So aaj nahi to kal, I think it will grow. And if you look at numbers, it's growing. It's just that there is so much catch up to do that we all feel impatient.
I'm just thinking, for anyone who's an investor who's looking at a long-term portfolio, 30, 35 years, you're someone who started his job at 25, will work for at least 40 years more. Why is debt not part of that?
Exactly.
Dunya equity. Karo equity. मैं नहीं बोल रहा हूँ मत करो. Growth है वहाँ. But I'm saying debt. I remember Radhika talking about the Bharat bond in our episode on that. She spoke of laddering. And I thought laddering is such an elegant, simple way of creating cash flows every year for the rest of your lifetime, for yourself, for the next generation. Anything. I mean, there's so much flexibility that
there is no wealth manager who even teaches you this. How to ladder, how to build a ladder. Because everything is either equity or bank mein rakho. Now we are getting this in-between solutions, InvIT, REITs and ladders and all that. I think we are at the early stage, but you are absolutely right. And all investors will have portfolio allocation. You will not have everything in equities, you will not have. But when you are getting 5% in bank and 15% in equity market, you obviously veer towards 15%. And especially this was after tax and this was. But now I think credit solutions, income and yield solutions, if they give you 10-12%, then they are comparable from a risk, return, liquidity point of view. a 15% equity return versus a 10-12% credit return, they then start coming in the ballpark. कि अगर भाई नहीं है तो at least cousin brother तो है kind of optionality.
Yeah. I mean, globally the bond market is bigger than the equity market.
It should be, yeah.
Globally, loans are more than equity. I mean, that's also quite logical, right? Because you would have lending and credit and instruments in credit to be much big. The most liquid financial product on the planet is the US Treasury second.
Yes.
It's the it's the US Treasury, the GSEC. So it's not an equity share. The S&P 500 might be the largest equity index, which is fine. But this is, so I'm just thinking in India, why are more people not owning a 10-year government paper? Sovereign hai yaar, kya hai? Matlab, 30-year paper. The entire range is there. But today, if I even want to buy that, sure, I can buy a debt mutual fund. Okay. For a beginner, that's there. But I'm saying the underlying paper is there. I don't know.
It's a much more complicated issue because once everybody starts doing that, then who will keep deposits in the bank? So ultimately, then the government will end up disintermediating the banks itself.
Achha, okay.
Because now you keep money in the bank and the banks are buying in that SLR 20-25% government securities. If you start buying the government securities directly, then the bank deposits will come down. If the bond market is very active, then you will invest directly in the bond market rather than go through banks. So I think ultimately it's an intermediation issue. It's a structural issue. And if you look at globally, I think the way the banking industry has gone is borrowing money and lending money is only maybe 1/3 of their profit. Okay. A lot of their other profit globally, not India. In the global banks come from capital market activity. You look at a JP Morgan. It comes from advising customers. It comes from distribution products. Like that also happening in India. Insurance they sell, mutual fund they sell. But currently, I think 80% of your profit is still what is called the core banking, which is borrowing and lending money, and 20 is all this extra
fee income or whatever.
Fee income, advisory income, capital markets. So globally, it is 50-50.
Okay.
So if you look at a Wells Fargo, they have a large wealth management business. You look at JP Morgan, they will have a large wealth management, capital market, investment banking business. So in India, and I call it a convergence of capital markets and banking system. See, currently we earlier had only banking system. 30 years ago, we started capital markets. ये equity चालू हुआ, ये credit में था, so there was no real conflict as such. But if you want to do credit, income and yield solutions, then there is a substitution effect that will come about. And that is what we are seeing. Bank deposits are not growing as much, but capital market inflows are growing much faster. So there is some amount of, I think, competition between banking channel and all. And ultimately, banks will come towards capital market. Capital market will go towards banks. And I wouldn't even be surprised 5 years down the line with a lot of banks acquire capital market players. We saw that happening in the US. So because capital market capability, when they have a large client who wants to do an IPO, wants to do M&A, you want to have the capability to advise them, then fund the acquisition also.
It's actually not happened so much in India. I can only think of Axis in-app. That's it. I can't think of any bigger.
And the reason for that, and you are absolutely right, the reason for that is we have been a capital-starved economy. But I think my hypothesis is we are now capital surplus economy. We have more capital than we can easily absorb. And that is why we are seeing, there is a lot of money coming into equity market. They are looking for returns. Last 3 years, FIs have sold so much and our markets have not fallen because there is the Indian local capital at a $4 trillion household savings of $1 trillion. We are, I think, capital self-sufficient, maybe not surplus as of now. And there are investors investing outside of India, LRS and all that. All the global, all the international funds offered by the Indian mutual funds are all full to capacity. So there is a need so there is capital that is there, and all this happens when you are a capital surplus country where you start looking at capital efficiency. Abhi to kya hai, just collecting capital and giving it out because it's a capital scarce economy. So I think around 2021-22, we did move away from capital scarce to capital self-sufficient.
yeah.
And in the next 5 years, we realized that we are a capital surplus. The reason we are seeing a lot of growth in asset management and wealth management is because we are becoming capital surplus.
A lot of people have a lot of money and don't know what to do with it.
How to invest
How
that,
to invest it, yeah,
how to
yeah.
get a good return, how to build a long-term portfolio, how to allocate between equity and debt. So how to allocate between India and international.
Yeah.
So I think the next 5 years, this will be the theme. But there is capital that needs a lot of advice, and there is extra capital than what we can absorb.
And outside of asset reconstruction, I just realized that you were among the earliest on wealth. Massive book on wealth also, which ultimately became Nomama. I think you sold it off or at least a stake in that.
We spun it off.
Spun it off, yeah, that's what.
I think even now Edelweiss shareholders got they got the shares in that. So we are early in wealth and capital markets, but we were also very early in our alternative asset business. We are the largest alternative asset manager in India. We have $8 billion of assets.
Wow.
And again, there we focus mainly on private credit and real asset. Our focus is on income and yields solution via the alternative platform. So asset management has two platforms, mutual funds and alternatives. I mean, if you look at globally, mutual fund is like BlackRock, and alternative is like Blackstone.
What do you have in alternatives? I mean, is the market there liquid? Like, I'm assuming you'll have like private credit, you'll have equity. What's that like?
So if I tell you today, the total mutual fund AUM is about 75 lakh crores.
Yeah.
The total alternatives in India are already 15 lakh crores.
1.5 already. I had no idea it's that big.
It is data. This is AIF and InvITs and REITs and all.
75, 15. Okay.
So it's already 20% of the market is alternative. Globally, half is alternatives now. So alternatives and globally alternatives also includes hedge funds. India, we don't have that. But alternatives includes private equity, private credit, hedge funds, infrastructure, real estate. It's happening in India also. Today, somebody like a Blackstone and Brookfield, they both have more than 45 million square foot of office space in their funds. All these are alternative assets in the real estate category.
Yes.
So India is seeing a boom in there. Again, all these are very early days, but alternatives has two parts, equity and non-equity.
Correct.
And in the non-equity, but both put together, alternatives is now 20% of the mutual fund, and alternatives profitability is usually 2 to 2.5 times of a mutual fund. So from a profit pool point of view, alternatives is about half of the mutual fund industry in India.
And I'm guessing the money that's going in there would be family offices, HNIs,
family offices. We still don't have seen a lot of institutional money in alternatives, which globally has been happening. Insurance companies and pension funds and endowments, which will also start in India as they look for yields. So as the hunger for yield goes up, we'll start seeing that also. So I think India is, Anupam, one of the things I've seen, if you see global trends, especially countries like US and all, what happened in US after 8-10 years happens in India.
I think that time gap will probably start.
So I think if you see the trends in the US, like even in wealth management, a company like BlackRock and Merrill Lynch started 70s, 80s and all. The Schwab was 80s and all. In fact, our entire wealth management was also modeled around Schwab strategy for for not just high net worth, but for the mass affluent. And the same thing we have done in alternatives. So there are alternative firms which are 30, 40 years old in the US, and you see their evolution, how it happened. I do think similar things will happen in India. So I think India, in a way, is still work in progress.
It will be there for some time, but that's the opportunity for all of us. Okay, we're almost done. Last couple of questions that I have for you. One is the people who have inspired or helped you. You mentioned one, which is Narayana Murthy. Anybody else you want to add to that list?
Lots of them. I find inspiration all over the place. But yeah, I think a lot of global business guys, even Indian, even other leaders. I think Nelson Mandela is one of my, I think iconic figure as a leader. The Dalai Lama, I look at it. I mean, on the non-business side. On the business side also, I think Steve Jobs, all of them. So I study, I read their biographies, I read their writings, I follow them. So there is a lot of things to learn from all of this also.
In India, who would be people that you admire? Across the spectrum, okay? I mean, I'm saying business, non-business, sports, whatever. If I were to ask you a list of top 5 People that you really admire from an India-specific perspective.
So I think on the business side, I've admired people like, Ratan Tata, Uday Kotak, Adi Godrej, all this. But, they really transformed the business. They did, I think, understood what it takes to build long-lasting. Obviously, people like Narayana, Murthy, Azim Premji, Nandan Nilekani. He's reinvented himself again and again. Fabulous, amazing. So I think on the philanthropy I think front also, there are people like, there are organizations like, Akshay Patra and all, which have done. So there is a lot to learn. There is a lot to be inspired in India. And India has a lot of such examples. I read a lot of books.
What are you reading currently? Maybe the top 3 over any book. We have book recommendations that we always ask our guests. I'm glad that you mentioned it. Anything you'd like to recommend to our audience?
So I read all kind of book. The one I'm currently reading is about the Nixon a shock in 1971 when the gold standard was broken. It was called 3 Days at Camp David.
3 days at Camp David. Wow, I haven't heard of this.
It was those 3 days where they broke the gold standard peg. And a lot of stuff that is happening today actually happened at that time, where the US dollar had strengthened, they want to weaken. So it's a very interesting book to read. But as I said, I read all kinds of books.
That's always good.
I read fiction, non-fiction, all of that. So I enjoy. So I also read books about leaders and all that, and get inspired by that. There is always one book I read recently was about a guy called Bill Campbell, who was called a $1 trillion coach. So that was why I founded the book about Nike, Phil Knight. Shoe Dog. I find it one of the most amazing
$1 trillion coach, Shoe Dog, 3 days in Camp David. 3 very good recommendations.
Then the other one I read, and I actually read again, is The Outsiders. Which is
William Thorndike.
William Thorndike. In fact, I did a video call with William Thorndike after I read the book. He's based somewhere in Maine. So I found that as an amazing book. So I find all this very interesting. If you want to, also there is one book which is called A Piece of the Action. Which is about how financial services got developed in the US in the 60s, 70s and the 80s.
Piece of the action.
The last name of the author is Nocera. I forget the first name. It's a hard to get book. It's not available on. I think it's now come on Kindle, but earlier it was only a hard copy available. It's a fabulous book. I'm also currently reading the Almanac of Naval Ravikant. Then
that's an all-time favorite.
Charlie Munger's Almanac is another one I've enjoyed reading. So again, there is a lot to read. I read about 40-50 books a year.
Wow. Almost one a week.
But I also read some lowbrow stuff like fiction.
Nothing wrong in that. That's okay. I'm going to take 2 books from them. I'm going to take 3 days in Camp David and I'm going to take a piece of the action. I just feel
you should read that. I think you will admire the piece of the action. You'll really appreciate the piece of the action.
Sounds like an interesting story. I never thought that a book like that was written. On that note of inspiration and loads of books, that is a wrap on this episode of Paisa Paisa, a really special one. My guest, Rashesh Shah, Chairman of Edelweiss Financial Services. Rashesh bhai, thank you so much for doing this, for giving us so much of your time and giving us so many ideas and your outlook on a whole lot of things. Thank you so much for doing this for our audience.
Absolutely enjoyed it. Thank you very much, Anupam, and thank you all of you.
Thank you so much.